Hello everyone, this is Professor Kent. Today we are going to be, this recording is regarding Chapter 20. Chapter 20 is leases. So we are going to be talking about leases. Now, some of you guys may know what lease is, some of you may not know what lease is. So let's go back and maybe you have signed a lease when you rented a apartment to live, or maybe you signed a lease when you leased a car for your personal use. So what is a lease? Lease is an agreement. So lease is an agreement between the lessee and lessor. So there's two people, or it could be two companies, lessee and lessor. Just the word lessor is the company or the person who owns the asset. So the lessor is the person who owns the asset. Lessee is the person or the company that uses this asset. So there's two companies. It's an agreement between the lessee and the lessor. Lessor is the person or the company that owns the asset, and lessee is the company or the person who uses the asset. Now, when lessee uses the asset, they have to pay something in return. In this case, it will be a lease payment. And then in the agreement, the lease payment will be noted, means you have to state what the lease payment is going to be, how long the lease is going to be, and these are the details: the name of the both companies, the lessor, the name of the lessor, the name of the lessee. All these things will be included in the agreement. Now, my next question to you guys is what is the advantage of leasing? Just to list a few. So what are the advantage of lease? Couple of them comes into my mind. To lease an asset, it costs less, where if you own an asset, it costs more. The other thing is, if you think about a computer, you bought it this year, next year, new computer comes into market, and then it becomes obsolete. So if you lease an asset, you could just give them back to the lessor. Is you're a headache. So it protects you. That's the first thing, is the cost is less. The second thing comes into my mind is the protection against obsolescence. And the other thing is that the 100% financing at fixed rate, we don't need to make a down payment. If you own an asset, if you wanted to go buy a car and you wanted to, you have to put some down payment. So there's no down payments. So when you have a lease, there is no fixed payment. There's only fixed payment, sorry. No, we don't have to make any down payment when you lease an asset payment. And the other thing, it's not from the point of view of the lessee, from the point of view of the lessor, is that they can write it off as an expense. So these are the criteria. These are the things that we needed to know about lease. Lease is an agreement between the two companies. Who are the two companies? Lessee is one, lessor is the other company. The agreement has to be between two companies, two people, two organizations. So it has to be between two people or two companies. In the agreement, you need to state what the payment amount is going to be. You need to state how long is the lease for. And then I've gone through some of the advantages of the lease. So what I'm going to do is I'm going to kind of use this side of the screen to go through a little bit more. So in this chapter, we're going to be talking about IFRS, and we're going to be talking about ASPE. So if a company is a public company, they will be following IFRS, and if a company is a private company, they will be following the ASPE standards to record the leases. IFRS, the rules are very little, where ASPE, there's more rules that we have to, in order to test the lease, we have to follow more rules, where IFRS is this one way or not. So there's only two criteria that has to be met in order for there's two type of leases. Doesn't matter if it's a IFR or ASPE. We'll go through IFRS first, then we'll go to ASPE. So IFRS calls their leases as a IFRS 16. That's the criteria for this lease is to be, what IFRS standard says that most of the leases will be capitalized. They want all the company to capitalize the leases. Means if you're going to be using the asset, you're benefiting the asset, you put it on your books. It's not going to be off the balance sheet leases. Means you cannot put it on the income statement as an expense. They want you to, IFRS standards say that you have to capitalize almost all the leases, except there's two things that you have to look into in order for the lease to be a operating lease. So let's see what are those. So there's two type of leases. There's an capital. You have to, under IFRS, you could capitalize the lease, or you can not capitalize it. You could, it could be an operating lease. So what is the difference between capitalizing it and what is the difference between operating the lease? So if the lease is for short term, if the lease is for short term, means if it's less than 12 months. So if if the lease is less than a 12 months, it will be an operating lease. Or if the lease is a low value lease, that means low value to you, low value $200 will be low, and to me low 200 will be high. So this is just a judgment call. So the regulation says that if it's a short term lease and less than 12 months, it will be an operating lease. Or if it's a low value, then it will be an operating lease. Otherwise, all the other leases will be capitalized. Means you have to put it on the company who's leasing it, they have to put it on their balance sheet. So there's no off the balance sheet leases anymore with the new IFRS standards. So what are some of the examples of, if you say that, what are some of the examples of a low value lease? The example that comes into my mind is if the company is leasing chairs, that's a low value. Desks, water coolers, some company leases water coolers. The other example could be they lease mobile phones. Those are the low value leases. Otherwise, all the other leases are capital leases. Now, all the other leases are capital leases. So then you have to capitalize it. You have to put it on your books. Let's go through an example for the criteria that has to be met for SV. There's more criteria has to be met, and then you only have to, there's 4 of them, but they only have to meet one criteria. But we're going to test all the criteria for this example. So let's, the first one is, I'm going to put it in here. So it's a transfer of ownership. So when we say transfer of an ownership, what do we mean by a transfer of an ownership? Just the word title transfer. It used to be called title transfer. So means there's two people, we know that it's lessee and then the lessor. So we know lessor owns it, lessee use the asset. If the asset is going to be, lessor is going to transfer the asset to the lessee, then it's a capital lease. You have to capitalize it. Now that's the first criteria. If the title is going to be transferred at the end of the lease, so you have the lease is for 5 years. At the end of the year, at the end of the 5 years, the title will be transferred to the lessee. Then it's a capital lease. It's not an operating lease anymore. Then the second one is that that it comes into my mind, not my mind. The second criteria is the economic life test. Economic life test. What is that? We have two things that is in my in our lease agreements. Those two things are the lease term and the economic life of the asset that you're leasing. Economic life of the asset. So the rule says that if the lease period, so the lease term is equal to or greater than 75% of the asset's economic life. I'm going to show you how to test this of life. So what you're doing, you're comparing your lease term to your economic life of the asset. In this case, let's say that if the economic life of the asset is 8 years, the lease is for 5 years. So how are you going to test it? So you're going to do 5 divided by the 8 gives you 5 divided by the 8 gives you 63%. So that this criteria is not met. So the economic life test is your lease period. So you're comparing your lease period to your economic life. So if it's a greater than 75%, it's a capital lease. Otherwise, it will be an operating lease. So this is the second one. So what if the lease, let's make the lease term to be 7 years. And then the life of the asset is 8 years. So let's do this test. 7 divided by 8 gives you 7 divided by 8 gives you 88%. So that means the economic life test is the lease term is greater than or equal to 75% of the economic life of the asset. If it's more than 75%, it becomes a capital lease. If it's not, if your answer is no, then you have to test the next criteria. If your answer was no here, you have to go to the second criteria. The rule says that if one of the criteria is met, it becomes a capital lease, but we're going to show you all of them. If this wasn't met, you have to go to the second one. If the second wasn't met, you have to go to the third one. If third one wasn't met, then you have to go to the fifth one. It used to be a little bit different, but all the criteria are sort of similar. So the third criteria you're comparing the fair value of the asset at the time you're signing the lease. So you're going to look at the fair value of the asset at the time the lease is being signed. Lease is being signed. You will know the fair value of the asset at the time you're signing the lease, because you needed to know it to compare if it's worth it for you to lease it or you to own it. So that's why the fair value of the asset will be given all the time. So or it will be available all the time. So the fair value, what you're going to do is the fair value of the asset. What you're going to do is you're going to compare to your present value of your lease payment. Lease payments. That's what you're going to be comparing it to. So what is this test? What are you testing for? You want your present value. If your present value of your lease payment is more than 90%, more than 90% of the fair value of the asset at the time of the lease, then it's a capital lease. So what you're doing is you're going to calculate the present value of your lease payment. If it's more than 90% of the fair value of the asset, it becomes a capital lease. If it's not, then it's an operating lease, or you have to go to the next criteria to test it. Now, when you're capitalizing it, when you're capitalizing your asset, you need to do the present value of the lease. So most of the leases are calculated in a begin mode, but you have to look at it when you're calculating the present value of your lease payment. Your calculator most of the time has to be in a begin mode. So how do you know when you put it in a begin mode? If the payment is due at the time you're signing the lease, at the beginning of the lease, then it will be in a begin mode. If the payment is due at the end of the first it's not due at the time you're signing the lease, then it will be in end mode. So the question will state if the lease is if the first payment is due at the time of the signing the lease, or at the timing is different. So you will know if you have to put in the calculator in a begin mode or not. So the other thing you have to look at it, your N. Of course, anytime you have to calculate the present value of something, you need an N. N will be your lease term. When you have a lease, you're allowed one renewal option. So we will go through that later on. At this point, we're just going to make it simple, and N is your lease term. So then we know what your payment is. Payment will be given to us, or there will be something else is given to us for us to calculate the payment. So in this case, payment will be given to us. And then we will need an interest rate to calculate the present value. So now most of the times in the question, to confuse you, or to so we know that, so to let you know in the questions that you are picking up the right rate. There will be two rates will be given. Most of the time two rates are given. There is a borrowing rate, and there's an implicit rate, which is known to both lessor and lessee. If a rate is known to both, and there's two rates, borrowing rate, which is another one, financing rate. For example, if this is 11% and this implicit rate is 10%, so there's two rates are given. If you when you're following an ASPE, you're calculating the present value of your lease payment, you will use the implicit rate. That's the rate. If you will use a lower rate. So ASPE, when you're doing it, if both rates are given, you'll use a lower rate. For IFRS, you will use the implicit rate. It doesn't matter if both rates are given to you or not. The IFRS standard says we have to, when you're calculating the present value of your lease payments, you have to use a interest rate. You will be using the lower rate under the ASPE. Under the IFRS, you will using the implicit rate. If implicit rate is not given, then you will pick the higher rate of whatever is given to us. Implicit rate is normally more visual in the lease agreements, so IFRS makes you use the implicit rate. But if it's an ASPE company, they have a choice of using a lower rate between the both rates. Now, going forward with the present value of the payment, when you're using the present value of the payment, in the payment, sometimes we are sometimes included in this payment, sometimes there's included a maintenance cost or any executory cost. If those are included in the payment, you have to take them out when you're calculating the present value of your lease payment. So those are the things that you have to take into consideration. And there's something we're going to be discussing later on when you're calculating the present value of your lease payment is residual value guaranteed and unguaranteed. I don't want to include it here, or bargain purchase option. I don't want to include it here because in order I want to make it simple as possible. So what you're going to do is you're going to compare. So what you're going to compare, you're comparing your present value of your lease payments to your you're comparing it to the fair value of the asset at the time you're signing the lease. Fair value of the asset at the time of the lease. So that's what you're going to be doing. So that's what you have to do, is compare it. So now once you calculate it, you have to say, is it your lease payment is greater than 90% of your fair value of the asset. If they're 90%, then this is a capital lease. If it's not, then we have one more thing. They put it in together with the title transfer, but I put it as a separate one. If you have a choice of a bargain purchase option, what is a bargain purchase? That's your, so that will be your fourth one in this case. Bargain purchase option. What is bargain purchase option? Means we know that there's two people in the agreement, lessor, and then we have a lessee. So if lessee has a lessee can purchase the asset at the end of the lease at a bargain price. It has to be a bargain price. So how do we check? How can we tell if it's a bargain price or not? So then let's say, for example, the lease is for 5 years. The fair value of the asset in year 5, fair value of the asset in year 5 is $1,000. And the lessor said, oh, you can have the asset for $100. Is that a bargain? Yes, it is. So lessee can own the asset at a bargain price, means they can own the asset at $100. But if the lessor says that, oh, you could get it for $999, so that's not a bargain, because the fair value of the asset is $1,000. The lessor is telling you to buy the asset at a $999. So that's not a bargain. So the answer is no. It's not a you cannot capitalize the asset. It will be an operating lease under the ASPE. So what are we testing? We're testing it, should we capitalize the lease or should we put it as an operating lease? So in this case, these are the criteria. There's 4 of them. Only one criteria has to be met. So what I recommend is you could go through your chapter. I will refer you to the chapter where you could get all this information. All this information is listed on your chapter 20. So if you go to chapter 20, page 13, all this criteria is listed. Only one criteria has to be fulfilled in order for it to be capital lease. If none of the criteria is met, then it becomes an operating lease. So there's 2 of them. There's an operating lease and there's a capital lease. In order for it to be a capital lease, one of the criteria has to be met. If none of the criteria is met, then it becomes an operating lease. So what we're going to do is, the first thing we're going to do is we're going to go through the first example and we're going to make it we're going to test the criteria, and once we test it, we're going to find out if this is a capital lease or it's an operating lease, and how to record it under IFRS 16 and how to record it following ASPE standards. So we know that IFRS, most of the leases are capitalized, so they're following IFRS 16 standards to capitalize their leases, where ASPE you have to follow these 4 criteria. Only one criteria has to be met in order to be an operating lease. So let's see if we can go through the first example. These examples again are posted under the page under the under chapter 20 of your discussion of your blackboard. Please go through these examples thoroughly in order to understand the chapter. These questions are right from the chapter, so I'm just bringing in right from the chapter. So what I did is I put it on Word. From there I brought it here for us to work on it. So this is our first example. We're going to go through this we're going to go through this example, and then we're going to read it together, and we're going to journalize it together. And then if you have any questions, please feel free to post them in the discussion board under under the discussion of chapter 20, since we're talking about leases. So I know this is there's a lot of information. I recommend reading the chapter. It's very important that you read the chapter, read the PowerPoints, and go through the recording in order to understand this chapter. So in this case, we are going to be doing both IFRS standards and ASPE standards. There's only a little difference, so it's just the title of the account that is different. The rest, there's no change. So that's why I'm going to do both at the same time to show you both of them. So IFRS standard calls it right to use an asset, and ASPE standard calls it a capital lease. So of course we have to find out if it's a capital lease or an operating lease. So let's see how we know that. So what do we need here? So we know that the lease is for 5 years. The lease agreement has to be non-cancelable, and it requires an equal rental payment of $25,981.62 at the beginning of the year. So now we know that we have to put our calculator in a begin mode when we are calculating the present value of the lease payment. So that's the first thing we need to do, is to put our calculator in a begin mode. So if you don't put it in a begin mode, you're going to get a wrong present value. So the first payment is due at the time we sign the lease. They're saying the lease contains no renewal option, and the equipment reverts to the lessor corporation at the end of the lease. So there is no bargain purchase option, or there's no title transfer, means transfer of an ownership. There's no transfer of an ownership at this time, because that's what the question is saying. So lease contains, it says it further down too, renewal option. This is just repeating it, and the equipment reverts to the lessor corporation at the end of the lease. The equipment has a fair value. We need that in order to test the lease for if it's an ASPE, so that we are given the fair value of the asset. So now and the estimated economic life of 5 years. So we know the life of the asset is 5 years. So now we know the lease term is 5 years and the life of the asset is 5 years. We know this is one of the criteria is met already, but we're going to test each one. So in this one, this example is pretty simple. We made it as a there's no residual value, so that we can make it simple, and we're going to add one feature at a time. So next example, we will add something, so we know how to journalize it separately. So we know that if it's the asset is amortized over a straight line method, then this leasing corporation pays the executory cost directly to the third party, except for the maintenance cost of $2,000, which is included in the annual lease payment. Anything that gets included in the annual payment, we have to take it out to calculate the present value of the lease. Then now look at this question. We're given two rates. We're given a borrowing rate, and we're given an implicit rate, which is a 10%. So and then it said this fact is known to leasing companies. A leasing corporation means that both company knows that this rate is known to both companies. If it's known to both companies, then we know that we know what rate to use at this point. So in ASPE, if we will be using a 10% when we are calculating the present value of the lease payment. And for IFRS, that's the implicit rate, that's the rate we are going to use. So let's see if we can test it and we know how to calculate it. So now we are going to be using IFRS and ASPE. So we already know, let's do the ASPE test. So the first test is now title transfer or transfer of an ownership. I call it title transfer. It's a transfer of ownership. Our answer is no. So if the answer is no, we know that because the title is not going to be transferred, the asset will go back to the lessor. So the first criteria is not met for ASPE. The second criteria was that I might not go in the same thing as you are. So the second one is your economic life test, which is economic life test. So what are you we're saying is the economic life test is greater than 75% of the lease term. So what is the lease term? Lease term, what we're going to do, lease term is 5 years. And then what are we comparing it to? We're comparing it to the economic life, which is also 5, so which becomes 100%. So economic life test is a greater than 75%. The answer is yes. If the answer is yes, that means we have to capitalize the asset. But in this case, we are going to go further and we're going to test the other thing, the other criteria. So the third one was that the recovery of a investment by the owner. What you're doing is a recovery test. So what you're doing, you're going to present value of your lease payment. What are you comparing it to? You're comparing it to fair value of the asset at the time of the lease. So in this case, the fair value of the asset is 100,000. We know that, but we have to calculate the present value of the lease. This is which is the first question is asking us to do. So let's see if we can calculate the present value of the lease payment to find out if it's a greater than 90% or not. Greater than 90% or greater than or equal to 90%. Or not. So let's see, what do we need when we calculate the present value of your lease payments? So first thing we need is a payment. In this case, the payment is, we know the payment is 25,981.62. Like I said in my earlier, if there was an executory cost or any type of a cost, we need to take it out of that. So we have to take the 2,000 out. So our payment becomes 23,981.62. That becomes my payment. Like I said, that the payment is due at the beginning of the year. So we have to put our calculator in a begin mode in order to calculate it. If you don't put it in a begin mode, you're going to get a wrong present value, and this test will be wrong and your journal entries will be wrong. Where N is 5, which is your lease term, your IY is equal to your 10%, your future value is going to be 0, you're going to compute your present value. So you should get 100,000. So we know the present value of the lease term is 100,000. I'm going to use another ink. So is 100,000. So if you take, how you're going to do this test, 100,000 divided by 100,000 is equal to 100%. So this test, the answer is yes. If the answer is yes, it's a capital. You have to capitalize the asset. Now, the other one we have to look at is the bargain purchase option. In other words, bargain option. Now we know, is there a bargain purchase option? No, there is no bargain purchase option. If there's no bargain purchase option, then it's not a capital asset. But we know in the criteria is only one has to be met. In this case, this criteria is met and this criteria is met. Then it becomes a capital lease. For the ASPE, for IFRS, is it longer than 12 months? Yes, it is longer than 12 months. is a low value lease. No, this is not a low value lease. 100,000 is not a low value lease, so they have to capitalize it. So they will be using IFRS 16 standard. So first question was determine the present value of the lease. Did we under the IFRS and under the SP? So present value of the lease under both is 100,000. So if you are having a hard time calculating it, please go back to your I posted something regarding the calculator. Go back to that document and learn how to calculate it. If you don't get the right answer, then refresh your calculator. You can reset it at the back of your calculator. So this you could recalculate it. So now the next thing is next question is the prepare the journal entry. Since it's a capital lease, we have to record this in our books. We're only going to be learning about leases books, so we're not going to learn lesser at this point. You could read up on it. It's very simple. They have a receivable. One company has a payable, the other one has a receivable. However, what we want to do is I want to show you the lessee first. If we have our time, we will go through the lesser point of view of the books and the lesser's books too. So now the first question is asking prepare the journal entry to record on the lease corporation's books on January 1st. At this time, we signed the lease. So what we're going to do is we're going to show under both. We're going to show under ASPE, and we're going to show under IFRS 16 standard, which is IFRS. It's pretty simple. It's just one thing is different. Not simple. It's just one thing that is different from the both. When you are recording the asset, you record the whatever the present value you calculated. So in this case, we calculate the present value of the lease payments. That's what we will be recording. We will be recording under equipment. If you bought equipment, it'll be equipment. If you bought a machine, it'll be a machine. So it depends on whatever asset you bought, whatever asset you leased. So it's called equipment under lease, which is going to be your 100,000. Then you have a cash. Because this entry is done on January 1st, we already made a first payment, which is going to be 23,981.62. At the beginning of the year, we made a payment. So that's our first payment that we made, 23,981. Then we have the obligation. It's called obligation under lease, which is going to be 76,018 and 32 cents. So now this is recorded on this account goes on your balance sheet. This account is also balance sheet. So so in other words, there's no off the balance sheet anymore under IFRS, but ASPE still has those ones. Because IFRS standards are very strict and they don't want you to put anything off the balance sheet. So they want you to record everything on the balance sheet. So now let's see how this is different from how this is different. So let's see if I could use a different color so that we could show you the difference. So under IFRS, the present value of the lease payment is 100,000 too. So what the account that is called right to use asset. So they call it right to use asset, which will be 100,000. Then they call it lease liability, which is going to be 76,018.32. And then we have a cash off of the first payment, 931.82. 931. Oh no, sorry, it's 38 here. 38 here in order for us to balance. So now if you look at it, these two accounts are different, and these two accounts, the name of the accounts are different. Nothing else is different. So only the name is different, nothing else is different. So that's what the only thing is different under the IFR and ASPE is the accounts that are used are different. Let's go do the next transaction. Prepare the journal entry to record the executory cost, which is like a maintenance cost. So let's do it under ASPE. So I'm going to use the red ink to kind of stick with the same. So it's a maintenance cost. How much was it? Was $2,000 because we know that this is given to us. So let's something happened. Sorry.